Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. Today I have Paden Squires of Squires Tax Planning. Thank you for being on the show.
Yeah, absolutely, Rick. Excited to be here, man.
Yeah, and so I'm excited because LA is unique. I mean, I guess every city says they're unique, but we do have a lot of high income earners, whether it's in real estate or otherwise. And we're starting to see, they look at their tax returns, they look at their W-2s, and there's like, really, I paid 30, 50, $100,000 in taxes. Like this kind of
Yeah.
blows. So why don't we first start, like, how did you get into this space? Like, what made you
Yeah.
motivated to talk taxes?
Yeah, great question. Yeah, great question. My background, definitely not a California guy. I'm a Midwest guy in Central Missouri. Grew up in Central Missouri, grew up in single mom family. And just my childhood background there, we weren't like crazy poor or anything, but like I felt like, it was obvious to me we had less than others. So I think my love for money or focus for money kind of came from that, right? I think I've kind of always been driven never to be poor, or you know what I mean. I felt like you don't have options, you don't have tools, all those things. So I've studied money from a young age. I was really passionate about it through college. Um, I came out of college. It was kind of the recession, the big financial recession, 08, 09. Uh, Jobs were terrible. I just came out with an accounting and finance degree, and like the whole finance world was getting laid off, like as I was graduating college. So I decided to, well, let's go back to school. So I was working a job and then was getting my MBA at night and online. So I ended up getting my MBA, was working in jobs in banking and insurance, and worked for a Fortune 500 company and just like their finance department. Quickly found out not a great employee, like not my thing. I don't really like it. I was a good employee. Like anybody that saw me would be like, "Oh yeah, Peyton was a good employee, did his job or whatever." But like, I hated it. Like I didn't like it at all. So I kind of made a plan. I was a couple courses away from being upset for the CPA exam. So I took a couple more college courses, set for the CPA exam, studied for the CPA exam while I was working, full time at a job. I didn't even tell my boss that I was studying for the exam. Like I literally was 3/4 of the way through it, which takes like 9 months to do it. And before I ever told anybody I was even doing it. So studied, passed. The reason I tell them is because as soon as I passed, I was like, hey, see you guys later.
Yeah, right.
So quit the job, opened up my own tax firm. That was in 2014. I've grown into what it is today. Opened that up my living room and mine and my wife's first house. And, now we got a whole team and all kinds of stuff. Obviously learned a ton of lessons in the last 10 plus years as an
Yeah.
entrepreneur. Beat my head against the wall doing a lot of different things. But money, I love studying money. I love helping people actually make a plan around money. So many people there's no intentionality around it, right? Where
Hmm.
it's maybe you're really even good at making money, but you're terrible at keeping it or growing it, right?
Yeah.
I see that all the time. Like income skills are not equivalent to investor or holding on to your money skills. They're just not the same thing. So that's kind of a short nutshell why I do what I do. But yeah, I really love focus on really high level planning. I'm a CPA and also a CFP, so we do really high level tax planning and wealth planning as well.
Nice. So, because like it's somewhat of a struggle because in LA you can make 100,000 and actually be struggling.
Yeah, yeah. Oh, yeah, yeah, yeah.
Like
Not in
it's
little old Columbia, Missouri. That's a decent income.
right, yeah, you know what I mean? So it's like, okay, or it's you just like I'm a real estate agent. It's like here, like I had someone who's like a real estate agent in like the Midwest where homes are going for 100K,
Yeah,
and
yeah,
I'm
yeah.
like, and, but they're doing 20, 30 deals, and I'm like,
Mhm.
I can do like half that. I could
Yeah,
do a third of
yeah.
that because the average
It's a
price
different
point's
game.
900.
Yeah,
Right, it's a different game. But what have you been seeing lately with some of these higher income earners in
yeah.
terms of taxes, mistakes? Like what's going on today that we didn't see before?
Yeah. Another great question, right? Like, it's if you follow the news at all, right? The OBBB, one big beautiful bill, or whatever that's working.
It's
That's
like
its legal name. It's yeah,
it's like how do
legal
you
name.
show an ego without showing an ego?
Yes. I didn't make that. That's the actual name of the bill.
Yeah.
It's, so that's major tax legislation really is written into that bill. And, as we record this, it's being debated. A version passed the House. The Senate's probably going to come up with its complete own version, and they're going to have to reconcile that somehow. But inside of that bill, along with tons of other stuff, that's why it's OBBB, one big bill, major tax legislation.
Yeah.
Um, it's going to be renewing. It's going to be renewing the Trump tax cuts that came into play in 2018. At this moment, it looks like taxes are going to more or less stay the same as they kind of have been in the last, since 2018. There's going to be some new things in there. I think also there's going to be more opportunities in there. Um, there's definitely some tax cuts in there, right? So if you're a 1099 worker, or just self-employed, you get what's called like a qualified business income deduction, where, long story short, not all of your income is taxed.
Hmm.
It seems like that's going to become more generous. What exactly it's going to look like, hard to say, but that might become more generous. Another thing to look at that's going to be huge, for real estate investors specifically, is in that bill, it retroactives 100% bonus depreciation back to the beginning of 2025. So, even this bill passes, it's affecting 2026 and on. The bonus depreciation piece is actually back to the beginning of 2025. So, meaning, like, if this bill passes, we're recording this in May in 2025, anything you buy now would be 100% bonus depreciation. And what that means is you can buy an asset and write it off completely. Real estate, you can't just write off a house, but if you guys ever talk about cost segregations and
Hmm.
things you can do there, having 100% bonus depreciation makes cost segregations even more attractive.
Got it. Okay. So so it sounds like it's everything's up in the air in terms of some of these tax
Yeah.
cuts.
Yeah.
So what are people, can you even plan for some of this?
Yeah. I mean, like I said, I don't know any of the specifics, but we got a pretty good
Sure.
idea where it's going to land, right? The Republicans kind of have control. They're going to have to fight amongst themselves to land on something, because they all, like, every single one of them has to vote yes. But
Hmm.
they'll probably do that and ram whatever they got to ram through. So we have a good idea what ultimately is going to come out of there. And it's really, it's less the macro of what's going on in that and more the micro. I would say the planning and the value is, like, you need to know what's going on in your own situation. Less,
Right.
even, not that you don't need to know what's going on in the macro, but I guarantee you there's a whole lot more efficiency things we can do in the micro in your own situation. So while we pay attention to the macro, like, the micro is what really matters. And that is, when how we work with our clients is, we're not just like tax preparers, right? Everybody has, a CPA or somebody that just preps their taxes. Very few people actually have a strategist and somebody that's walking alongside them to plan throughout the year, looking at income, looking how income's fluctuating, looking at what properties you've bought, and just projecting all that stuff out on a regular basis throughout the year. So you can make really strategic decisions. That's very crucial in the intentionality behind that. That's where a whole lot of efficiencies and honestly just flat out savings can be found by getting very intentional about it.
Got it. Yeah. And I guess we should probably preface by saying everything we're talking about in this episode is general,
Oh
not
yeah, yeah,
specific.
yeah. I
I
can't.
know
Yeah,
it's weird. It's like, but you never know,
yeah,
especially
yeah. And I,
LA
I, I try to
listeners.
do that all the time.
Yeah.
It's like,
It's
guys,
so hard to give up.
I'm talking in big concepts. Like anything I say may or may not apply.
Right, right. But yeah, so I think you brought up something interesting. Oftentimes we hear whatever's going on in the news,
Yeah,
politically big, whatever. And it's like, okay, but does this affect your day-to-day life? We
yeah,
got to focus on, what we're doing. People are like, oh, I don't like so and so. Okay, but is that stopping you from making calls?
yeah,
No, it's not really.
yeah,
Um, so one of the biggest tax savings um, is really the state income tax if you decide to leave California. So, like for example, I do have clients, they've considered leaving California and
yeah,
going to the Tennessees, the Floridas, some of these,
Texas. Yeah,
and their thoughts like, I'm gonna save 40 grand a year in taxes. And it's like, I can't argue with that.
yeah.
What are you seeing in terms of that kind of movement? Are people having those discussions? And
Hmm.
what if they really actually want to stay?
Yeah, 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 yeah. Well, I think the most important thing to bring, as like an advisor or how I see that situation is to bring like just context to it. It's like, okay, yes, California is one of the, yeah, I mean, it's probably the worst state, like from a regulatory
Oh
standpoint
yeah, we can
in
be blunt
business,
about that.
right? Like
Yeah.
100%.
California
Yeah.
California has its
Believe me,
issues.
like
It's not
anytime my
perfect.
clients are in California or have an employee in California, I'm like, oh God.
You're like your bill just went up by like
Yeah.
10%.
Yeah, and it's not the client. It's just like
Yeah.
California will just send you letters about all kinds of rant. Like they're in everything.
Yeah, for sure.
And so sure, but like you don't live on a spreadsheet. Like you don't your tax bill is not necessarily the most important thing in your life. So it
Right.
needs to be a life decision, not, that's a factor in the decision, right? I mean, yes,
Mhm.
it's very real. You could move to another state. I could one up you. You move to Puerto Rico and you'll pay like 4% flat income tax. So it's
Yeah, right.
and no federal income tax if you actually live in Puerto Rico. But um, so it's with the caveat of it's a much bigger discussion than just tax, obviously. But yeah, I
Sure.
mean, see, you rattle off a few states there: Texas, Washington, Tennessee, Arkansas, Missouri's moving in that direction of really just no income tax states, or just trying to get as business friendly as possible. So, you know, yes, you're going to have less hassle, but then at the same time, like if your life's set up in California and you love California and you love the markets there, well, you can make as much money as you ever need living in California too, right? Like,
Yeah.
and me from a tax planner standpoint would be like, well, that's even more reason to get insanely intentional about your taxes, right? And so so there's a lot that goes into that. It's not necessarily a money decision, but it can be really tempting, especially if you're making a few million bucks a year. And
Right.
so California's top rate, I think, is like 13 or something.
Yeah.
Yeah, that could go to zero in a different state.
Well, wasn't it? There was some headline about like when Jeff Bezos moved to Florida. It was like he saved like $1 billion in taxes.
Probably, yeah,
And,
probably.
and just so we're all clear, he just made Florida his primary residence. Whether he
Yeah,
spends time there is a
I
different
mean, he's traveling the
conversation.
world all the time. You know what I mean? Like, yeah,
Right.
yeah,
Well, and you do bring up a good point. So, what I've talked to people about LA is like, look, where in the world can you go surfing in the morning and snowboarding that
yeah,
same afternoon?
yeah.
And I'm not saying I don't even do those things, but LA does have a lot to offer, right?
Oh, a
Universal
ton.
Studios, or
Yeah,
like even if you just want to go for a hike, that's free. We have tennis courts, that's free. We have all this stuff. But I will say, if you don't take advantage of what California has to
yeah,
offer, then you might want to move.
yeah,
Otherwise, take advantage of it. Go grab a coffee by the beach. It's five
yeah,
bucks, you know?
yeah.
Um,
And
but otherwise, move.
yeah, yeah, absolutely, Rick. And it's it's you can't have your cake and eat it too, right? Like if
Right.
you want to enjoy California, great, do it. You know what I mean?
Yeah.
But like, if you can't get into a house or you can't do this or can't do that, and we'll take control of it and do something about right? Like
Hmm.
it's don't be, I hate saying this cliche or whatever, don't be a victim, but it's true. It's like just take
Right.
control of what you can take control of. And yeah, I mean, you can move. You can.
You
Absolutely. It'll be
can.
a little scary, but you can
Oh,
do
very.
it.
Oh
Right.
yeah. Most of my all my siblings moved out of state,
Yeah.
and they're super happy. And
Yeah.
I'm like,
And
cool.
and here's the thing. Move, and if you don't like it, they'll take you back.
Yeah,
You know what
right.
I mean? It's like, so
Oh
yeah.
yeah. So what are some of the tax strategies that they could, if they like, no,
Yeah.
I want
Yeah.
to stay in LA, what could they be doing?
Yeah. There's several things, right? I mean, obviously the big one in real estate is 1031 exchanges, right?
Right.
We probably talked about those, right? That's where you sell a house and you basically roll all the money into the next property, and so
Hmm.
that in of itself isn't a taxable
Uh,
transaction, right?
that's what
So
I
you get
did.
rid of capital. Yeah, yeah. Beautiful strategy, especially if you're still continuing to grow into real estate, and you can always roll forward, and as long as you have new stuff to buy, right? Great strategy. But that can cause problems too, just because like you can't necessarily find a property to buy, right? Or you got to get a time, there's a timing window of when you sell your property and then close on the next one, and all that stuff has to be done, which it's done all the time, but it can be a little
Yeah.
tricky sometimes, right? It can be tricky to
Yeah.
pull off.
You could do a reverse 1031 exchange.
You
I've had
can.
I've had clients do that.
Yeah, I've seen a few of those. Those can be even
It's
more
creative.
clunky. Can be
It
even
can
weird.
be.
But yeah, yeah. I mean, they work, right? Like they work.
Yeah. Yeah,
And
I will say it's more expensive.
yeah,
It's
because
like
no one knows how to
seven.
do them. Like,
Oh, right. Well, it requires an attorney.
yeah,
So instead of the 1,200 bucks, it costs 7 grand, which in
it can be
California,
worth it.
my
Yeah,
right, my client's like, I'll pay 7 grand all day if it means I can buy the property first and then sell. But I get
correct.
it. If you're in these smaller markets, you're like 7 grand's a lot when I'm going from $100,000 property to like
Yeah,
a three hundred
yeah.
thousand.
It's gotta make sense. And I tell you what, like you'll at if you just go to a run of mill title company or something, they'll just like, oh, you can't do that. Like,
Oh
they
yeah.
don't even know that you can do that,
Oh
right?
yeah. Yeah, that happened with one of my clients where we got creative actually. We were able to do 100% financing on the purchase because we
Hmm.
did a cross-collateralization loan. So both properties were leveraged, knowing
Hmm.
that we were going to sell that other property and just pay off the loan later on. But to
Gotcha.
do
Yeah, yeah,
it, we had to use the lender's 1031 exchange company and all that just because we needed all in-house where everybody understood what was going
yeah.
on.
Oh, yeah, yeah. And then you got to get whoever's accountant to understand it too.
Oh, right? I'm like, yeah. Oh yeah, that was
Because
a
I
major.
almost guarantee you the accountant's never seen one. You know what I
Oh
mean?
yeah.
Like, yeah. So,
Yeah, they're just
um,
not in day to day. But yeah, sorry, go ahead.
yeah, yeah, absolutely. So, so other than 1031 exchanges, um, another thing to look at is cost segregations, right? I was kind of touching on them earlier.
Yeah.
So you buy a residential rental property, you got to depreciate it over 27 and a half years. So, you buy $1 million property each year, you get a little bit of that $1 million chunked up as an expense on your tax return.
Right.
What a cost segregation does is comes in and it breaks out all the components of the piece of real estate. So it's like the appliances, the cabinets, the carpet, the whatever, right? Breaks out all those components because those components can be depreciated faster. And not only can they be depreciated faster, they can be bonus depreciated. And you remember what I said earlier about 100% bonus depreciation. So if you do a cost segregation and you have 100% bonus depreciation, literally all the dollars that get broken out and applied to, the carpet and all the different components of the house that aren't the structure get written off in
Right.
year one, get fully
Hmm.
written off in year one. So it's cost segregations. It's not uncommon to have 30-40% of the purchase price of the property as an expense in year one, which can be very powerful, if you have other, large income years to offset other income, or you sold some property, timing that with, large income years can be very, very powerful. Um, another thing that's hanging out in this one big beautiful bill that's hanging out there. This thing called opportunity zones. So opportunity
Yeah.
zones, they came out in 2018 on the original Trump tax cuts. And they still exist, but this would basically reset it and kind of start opportunity zones over again. Um, High level how they work. It's a strategy to reduce and really honestly eliminate capital gains tax over the long time if you're willing to make a 7-10 year play. So what you do, let's say you sell a property, you got I don't know, you made 300 grand capital gain on it, right? So let's say you bought it for 500. We're using simple math here. You bought it for
Sure.
500, sold it for 800. You made 300K capital gain, right? You can take 300K cash and put it into an opportunity zone. So that can either be like an opportunity zone fund, like there's plenty of funds out there that have real estate or designed to be an opportunity zone. You can try to do your own opportunity zone, like you can do a real estate development in a designated opportunity
Hmm.
zone. But long story short, if you take that capital gain amount, so you don't even have to take your whole basis, which is different than, the 1031. So if you're doing an opportunity zone fund, you can actually get cash out of a deal and still not pay taxes. So you can put your capital gain into an opportunity zone fund. The taxes get deferred for like 8 years. And we don't know the exact timeline right now because that's what they're doing in Congress. But so let's say it's 2026, you got this $300,000 capital gain, you drop it into an opportunity zone fund. That 300K, your tax bill on it gets deferred from like 2026 to like 2034 or something like that, right? Like 8 years.
Hmm.
So 8 years later, your tax bill will actually come due. In 8 years, that fund is designed to kick you out of distribution of the exact amount your tax bill is going to be, for you to pay your
Okay.
tax bill 8 years later, and that distribution's tax free. And
Hmm.
then if you just hold on to the underlying investment for at least 10 years, so if you 2026 sell it in, after 2036, all of it's tax free. So
Interesting.
long story short, you can like drop a capital gain amount in there. You're going to get a distribution to pay your tax bill 8 years later. It's tax free money, and then you're never going to pay taxes on the money at all. When you sell it later for a capital gain, that capital gain just isn't subject to income taxes. So it can
So
be a
I
very powerful thing.
so I had a developer.
Yeah.
He built 5 homes on a lot,
Mm-hmm.
and it was in an opportunity zone.
Mm-hmm.
What he ended up doing was he sold it to someone who's going to rent out all five before we got the sign off from the city.
Okay.
So therefore, the next owner got the sign off from the city and benefited from those tax those
Yeah.
tax breaks because he
Yeah.
was technically the owner at that
Yeah.
point.
And so some of what Congress is debating right this, and from what I read, that it's, opportunity zones, or, it's going to continue, like both parties seem to support it.
Well,
Um,
yeah.
but but those opportunity zones are drawn by the governors of the states. So
Hmm.
there's a lot of games that are played in how those things are drawn as well. So it's like it's not even like all these funds are necessarily like there's oil fields.
Yeah.
So what they just put it like that.
Yeah.
Uh,
Oh, yeah. No, there's a reason why they're pushing for it.
yeah.
And look, development's getting harder and harder in the United States for a variety of reasons, whether it's interest rates, cost of construction, whatever. So I know that some of these tax breaks tends to incentivize people
Yeah.
to do more building.
Yeah. And then, sometimes governors just throw bones to the people that elect them. So
Yeah,
that's
right?
where it's like,
Oh,
oh,
this
this
is all
oil
about
field
votes.
somehow is, this oil drilling field is somehow an opportunity. So,
Yeah, no, for sure.
yeah.
Now, I know I mentioned the development, but some people are flipping homes, right?
Yeah.
That's a thing, and
Mhm.
that is taxed. People don't realize that. People are like,
It's
oh, can I just
active.
do it?
Yeah.
Exactly, it's an active activity versus owning property as a rental is considered to be
Right.
passive, which I
Mhm.
would strongly disagree. It has become a very
Yeah.
active activity
Oh,
lately.
yes, very much so.
Yeah, I've noticed that over the last few years. It's become much, I've been much more involved on my properties, even with the property managers, than I
Mhm.
have in the past.
Yeah.
Um, but regardless, like, how is that tax structure different when you're flipping homes? How can
Yeah.
people kind of
Yeah. Do
make
something
that
about it.
work?
Yeah.
Yeah.
Yeah. So yeah, common misconception. I have clients come to me all the time, and I'm like, yeah, no, that's it's active income. So when
Yeah.
you're like in the business of flipping.
Oh, hang on, I think your microphone's going out. Unless it's my headphones.
I don't seem to have any.
There you go. You're good
Are you
now.
good? Okay.
Yeah.
Yeah. Yeah.
Okay. Sorry. So go
No,
ahead. So
you're
we're talking
good.
about flipping homes.
Yeah. So when you're actively flipping homes, it's active income. It's subject to income tax rates, not capital gains rates. And the
Hmm.
kicker is it's actually also subject to self-employment tax, which is Social Security Medicare tax, which is an extra 15.3%.
Hmm.
So it's taxed way worse than, holding a property and doing, as an asset and selling it. If you're going to do something about it, I mean, like if you're making significant money doing that, an S-Corp model might make sense. An S-Corp model, S-Corp models don't make sense for long-term rentals because the whole point mostly of an S-Corp model is to avoid that extra self-employment tax I was telling you about, the Social Security Medicare tax. Rental income isn't subject to that anyway. So it's like, and there's other issues for owning real estate in S corps, but if you're doing active flipping, an S corp model very well could save you money in taxes. Could save you, significant money on like self-employment tax, depending on your situation.
Got it. Now, because it's so I meet a lot of these like aspiring investors. They're talking, hey, I should put it in LLC. Oh, I should put it in S Corp. Oh, maybe it's, and I've talked to other people on my podcast where it's like, yeah, maybe an S series or like a series LLC. Like this stuff gets really complicated, and it's interesting because you can talk to different people, whether it's you or someone, everyone's going to give a different opinion.
Yep, 100%.
So before they have those conversations with people like you or others, like what questions should they be thinking about to know to ask in order to get the right answer, if that
Yeah,
makes sense?
yeah, 100%. Yeah, and most of all this structuring stuff when you're talking about rentals, doesn't really matter from a tax perspective. And and,
Right.
and here's why I say that. It's way more of a legal liability question than really
Hmm.
anything, and I'm not an attorney, I'm a
Sure.
tax guy. So the tax structure, rental income's rental income.
Right.
Whether it's in an LLC, whether it's in your personal name, whether it's in an S corp, literally all those dollars will be taxed exactly the same. So mostly from a tax standpoint, and I say mostly because there's always caveats, but um,
Sure.
it doesn't really matter, and and locally in my area, like LLCs are really easy to set up. Not necessarily in California because I think they charge you $800 just to have one a year.
Yes.
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 They
Oh,
don't
yeah,
do
that's
any of
what
that in Missouri.
is why most of my investor
Yeah,
clients don't have LLCs. They're like, we just
yeah,
put it in
and
the
and and
trust.
that's yeah, and you might as well, and once again, this is not legal advice, but
Correct.
getting a big umbrella insurance policy, covering your
So
butt that way, maybe
that's what
that
we did.
that that very well may be the better way to go, right?
Right.
But in my local state of Missouri, like an LLC, I can set up in 10 minutes online. It costs $50, and the state doesn't charge me anything every year. So it's like for
Hmm.
my investors or property I buy here locally, it's like, well, why not have an LLC? You know what I mean? There's like no, there's really like no reason. It's just like an extra layer of protection, but that's not necessarily the case, right? And that's not the case in California at all. So it's really you can get extremely complicated. I've seen it extremely complicated. I've seen people with literally $30 million of real estate, and it's as simple as can be. So it's all just in his personal name on his tax return, right? And so it's really a legal question, and I'm not
Sure.
totally qualified to answer that, but from a tax side, I mean it matters very little. Like I think too many people spend too much time trying to answer that question instead of maybe doing what they need to do to grow their real estate portfolio. Is what I say.
It's funny. The people who ask me those questions are generally the ones that don't have
Yeah,
real
they're
estate. They're
yeah,
they're
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 kind of
thinking
they're
too
just
far
kind of
ahead.
avoiding the work, aren't they?
Yeah. Well, it's interesting. Like, I meet people all the time, and they tell me what, especially because like my one of my niches is like house hacking, right? So I
Yeah,
help clients buy a
yeah.
property, rent by the room, all that.
I
I've
did
done
that. My
two.
first house was a house hack.
I'm on my second one here in LA.
Yeah, great.
I'm actually a case study in the house hacking book for Bigger
Nice.
Pockets.
Nice.
But yeah, like people, it's all about setting expectations, but everyone wants these home run deals, and it's like, dude, start with the base hit.
Yeah.
Just
Just
base
go see
hit.
if you can make a buck on a property.
Right. Or like even if like on house hacking you don't necessarily cash flow, but you're benefiting the
Yeah.
other
You're
way.
reducing your personal expense or whatnot, right?
Exactly. So you're right though. It's kind of like they tend to overthink it up
Mhm.
front. And I'm like, let's just go buy the house. Oh, what
Yeah.
if I screw up? I'm like, yeah, I thought I screwed up on my second house hack. Like our 4 month project took a year and it cost us a fortune. It's like, but now we're fine.
And
We're
now you
good.
know what you're doing. And like, but like
Hmm.
what you learned in a year, like
Oh
that
yeah.
person on the sideline will never learn. You
Yeah.
know what I mean? Like because you learned, you got a PhD in that year of
Oh my
house
gosh.
hacking,
It,
right?
it costs the same,
Yeah, exactly. But like
right?
that's no one, like no one's going to get to where you're at without doing that, right? You
Right.
know what I mean?
Exactly. Oh yeah. And again, you just get creative. My wife and I, we ended up moving into our ADU, the 360 square feet.
Yeah.
We just got married, and I was like, well, we're not moving into the house, we're moving into the ADU. And she's like, wait, what are we doing? I'm like, we're broke. And by moving
Want to make some money?
there,
Yeah.
we're still primary owner, so we can still refinance,
Yeah.
even though the main house is being rented out. She's like, oh, refinance twice, dropping our bill by like over $1,000 a month. Now it's like, cool, we're
Yeah,
good, we're
yeah, yeah,
set.
yeah. You no, and that's that's my experience working with tons and tons of investors over the years. It's like that first year or two of owning any significant, you buy into the next level of property or whatever. It's that first year where it's like, oh God, this feels really
This
tight and whatever.
sucks.
Yeah, I mean, it's all the risk in real estate's like in the first couple of years of owning it, right? Like the risk like deleverages over time unless you're constantly re-leveraging it. But yeah,
Yeah. Actually, you bring up a good point. So, like, I was talking to one of my investors, and we both seem to agree, and love to get your opinion. It takes about 2 years for things to kind of settle, and
yeah,
assuming you don't do anything drastic, like a cash out refi, anything like that. But yeah, it
yeah,
does seem like it takes about 2-ish years or so for
yeah.
things to, yeah, kind of level out.
Yeah, yeah, and yeah, that's I would say that's typically the case. I got I would say I've seen some investors that are insanely good that can do it a little faster than that, but that I mean, 2 years is a great timeline. I would tell you that.
I mean,
Yeah.
all things considered,
Yeah,
no, for
yeah,
sure.
absolutely. Yeah, some of my, I got a couple guys that are, big, do stuff at a very high level and yeah, I mean, they can get stuff 6 months. But well, once again, 2 years is yeah.
Well, as you mentioned, like as you learn,
Yeah,
like maybe you
they
don't.
just develop more skills, right?
Exactly. Or maybe like they don't hire the contractor. Now they can hire all the subs directly
Yeah,
because they
yeah, and
know
they've
how to
built this
manage those.
vertical thing where it's like, yeah, they're controlling
It's
the whole thing. Yeah,
exactly. I noticed that with one of my property managers is he now has a real estate division. He has a contracting division. Like everything starts coming
they all
in-house.
vertically integrate, like, and that's my client and friend that does it very. That's what he's done. He's built a massive system like that. Yeah.
It's wild what some of these people build. Like they're way smarter than me. And I'm
Well,
like,
it's they've
damn.
just done it. Like, I mean, this
Right.
guy, like, you met him off the street, you wouldn't think it.
Oh,
I mean, like he's 35 too. Like this guy's flipped like
uh,
2,100 houses in his
oh,
life and
wow.
he's 35. And
Wow.
now he does, large multifamily stuff all over the place and big in the multifamily space. But I mean, you met the guy,
You never would have known.
you'd never know.
Those are one of my favorite. And that's one of the big things I noticed in LA is you can never judge someone
Yeah.
in LA. Like I hosted an open house one. Oh no, I was doing a showing. This guy comes in, hair's all like rattled. I'm pretty sure thought he was missing a tooth. Like big belly, like walking through this like $3.5 million house. And then I'm overhearing him talk to the agent about maybe writing a cash offer. Then I find
That's what
out
I'm saying.
the guy like invented solar panels or something wild
Yeah.
like that.
He's like, I have my checkbook. How much is it?
Yeah, like I have the suitcase in my trunk,
It's
or
like, will you,
like,
you guys take a personal check or?
right? Or like my wife works in fashion. And so I actually had her help me once host an open house, and
Hmm.
she would point out who to talk to. Like I talk to everybody because again, you never
Yeah.
know.
Yeah,
But
but she's
like,
picking up on it. Yeah, yeah.
yeah, she's like, someone's coming in wearing like a t-shirt and sweats. She's like, you need to talk to them. She's like, why? She's like, I know those brands. They can afford this house. And it's like, yeah, it's LA. Are you homeless or are you hot? Like that's what I was told.
And I get it. And like, believe me, I'm not anywhere near that level, but like,
Right.
I don't like I'm a pretty, you know what I mean? I like to fly under the radar and that
You're
kind
a
of thing too.
tax guy. Tax guys like to fly under I come from two generations of CPAs, both my
Yeah.
father and grandfather. They
Yeah.
flew under the radar.
Yeah, and see, that's the thing. That's what I'm a bit of a unicorn. I'm the one guy out here talking.
No, I mean, look at Steve Jobs wore the same shirt every day.
Yeah.
Like,
Dude, I like doing that. So I like, no joke. I have like my company polos and like every day.
so I heard on I think it was actually a Bigger Pockets podcast, and they were talking about that, how like Brandon Turner, all these people, like, they wear like the same shirt every day. And it wasn't necessarily to fly under the radar. It's because they make so many decisions
Yeah,
in their
yeah.
lives, they
Hmm.
don't want to have to decide what clothes to wear.
Yeah, and I'm like such
I'm
a
right
plain
there.
guy. I'm all for it. Like,
Oh yeah. Like I told like whenever I look at clothes, it has to work with multiple outfits to the point
mhm.
where like this morning I knew I was doing podcasts like polo, jeans because I gotta run some errands and I'm done.
Yep.
And I look
Yep.
decent. And I've had clients
Yeah.
be like, wow, you kind of dress up. I'm like, do I? They're Chelsea boots. Like I literally wear a t-shirt and jeans, but if you wear the boots,
Yeah.
now you're fancy. I'm like, cool.
Yeah,
I'll
I'm
take it.
khakis and a polo like every single day.
Yeah.
And I don't ever have to think about it and it's love it.
Oh yeah, I agree. I'm totally the same way. I don't want to like overthink it if I don't have to. So let's talk about those people who don't overthink it. They wear the same clothes every day. Maybe they don't wear pants because everything's on Zoom
Yeah,
nowadays,
yeah.
and they work
Who
from
knows?
home.
Maybe I don't have any on.
Maybe.
I do.
And I've talked to like some people about like LLCs and
Yeah.
assets, and I do actually have an attorney that we've recently interviewed on this. But like from a tax perspective, is there anything else like we should be considering, and at what point should they be considering going this route?
The
Especially because
switch or whatever. Yeah.
yeah, especially 'cause in LA, one of the things that's unique is you can be an entrepreneur, but, and this is a big but, you can be a very high income earner as a W-2 employee. I
Yeah.
actually have a client who sold his business to become a W-2 employee, and he's
Hmm.
like, I make more money, less stress,
Hmm.
and you get all the employee benefits, right? Like paid
Yeah.
vacations, don't
Sure.
so like at what point do we start thinking about some of these tax structure from a tax perspective,
Yeah.
some
Yeah.
of
Yeah.
these
Yeah.
structures?
Yeah. Yeah. So, when we're just talking about long-term rentals, like,
Correct.
like I was kind of saying there, it's the structures matter less, right? Just
Right.
from a tax perspective. If it's in your LLC, if it's in your name, or if it's I guess that, or even in a trust or whatnot. I mean, ultimately, you're going to get the rental income back to you.
Yeah.
Tax the same, and you're going to write off all the same expenses. But from if you're in the flipping game that we talked about earlier, S-Corp model, typically I tell people S-Corp model starts to make sense when you're like profiting six figure plus a year.
Oh, interesting. Okay.
Um, so if you're flipping houses and you're making 50 grand profit a year, like the S-Corp model, yes, you can maybe do it, but it's like there's not enough there to make it worth doing in my opinion.
Sure.
So it's usually I tell people that like six-figure mark is where it's that turn starts to happen. So but once again, like LLCs or whatnot from a tax perspective,
Doesn't matter. It's all about
doesn't matter.
protection
Yeah, yeah.
from
It's
a
all
slip and
about
fall.
it's yeah, from taxes in the real estate. I mean, the real estate environment itself has a lot of benefits, especially if you're, a real estate professional. I don't think we talked
Yeah,
on
let's
that,
dive
but
into that
like,
a little bit.
yeah, so a real estate professional, um, let's define it and then let me tell you why it's important. So a real estate professional is an IRS definition. There may be other definitions, but the IRS has a definition of what that is. A real estate professional is somebody that works at minimum 750 hours a year in real estate activities. Okay. So that's the minimum amount of hours, 750. And you can't work in like another job more than 750 hours. So like real estate has to be your main gig, right? And a minimum of 750 hours. Real estate activities is like, if you're a realtor showing houses or working on your properties or showing your properties, all that kind of stuff. If you're a full-time realtor, probably a real estate
Yeah,
professional, right? So
hopefully.
yeah, right. Hopefully you're working half time.
Yeah.
So why is that important? When it comes to rentals, generally, like, I'm a tax guy. I'm not a real estate professional, even though my wife is. So in my situation, If I had losses on my real estate properties, right, which isn't uncommon with depreciation and different things you can have there, right? Losses in a typical situation get suspended. You can't, the IRS sees rental income as passive income. And then you say you got your W-2 or your business income as active income. Passive losses generally can't offset active income. So your rental losses are not offsetting your W-2 income. That's different if you're a real estate professional. That's why it's very big if you can qualify as a real estate professional. So, for example, I'm a CPA. I have several businesses I run and do create active income. My wife's a real estate professional. And if one of the spouses is a real estate professional, you get that status. So meaning like my real estate losses can offset my business income, which can be huge when you think about it. I can buy a property, do a cost seg on it, generate, let's say I buy $1 million property, do a cost segregation on it. I have 100% bonus depreciation. I can probably find $350,000, $400,000 worth of expense to go on my tax return. All from just purchasing a property. And I may or may not even had to put cash into that deal. So you can get really strategic around those ideas of offsetting income and wiping out income. And why is that important? Well, you get to hold on to your money, right? You don't have to pay your tax bill. You get to hold on to your money. You have more money to put into the next deal, and you can compound your wealth way faster by not having the drag of a tax expense on your returns the whole time. So real estate professional status gives you the ability to use rental losses to offset other income.
Got it. Now, can you be a real estate professional status and be a W-2 employee at like a real estate company? Would that count? Or does it have to be full entrepreneurship?
Yeah, I believe so. If you're working as the W-2 activities shouldn't count. Yeah, so the W-2 they wouldn't.
So they would not. So it has to be 750 hours as an entrepreneur in real estate, basically.
Yeah, more or less. Yep.
Got it.
And
Okay.
you can't. So like you could work 750 hours in real estate and 500 hours at a W-2 job and be fine, right? Because it's, you know what I mean? That W-2 can't be bigger than the real estate in the amount of time. And you have to have at least 750 hours.
Got it. Yeah, because I'm just thinking like if someone works for like a property manager, but then they also have rental properties, it's like, would that count?
Need to, and they need, and what I would tell you is like, don't go willy-nilly about putting the status on your tax return. Like it needs to be, that's things like what we do very well is document all this stuff. And like, we got records, anybody ever comes calling, here you go, we help people really document that stuff. But like, because, if you just put that on your tax return and, it's like, your odds of getting audited certainly go up, now if you qualify, you qualify, but yeah, you're more likely,
Right. That's all this really is. Like, I had someone tell me, it's like, look, you can do all the write-offs you want in the world. If you get audited, there's a fine.
They're real.
Yeah. And like, if you got to pay it, you got to pay it, slap on the wrist. But if you don't report income that you're supposed to get, that's a criminal activity.
Yeah,
very different.
Like Wesley Snipes and going to prison or
right.
Or Martha, or I guess Martha Stewart was doing insider trading, not tax.
Yeah, she's doing insider trading. Which can't.
That was off.
Okay, that's all right. I will say one of my favorite memes of all time is her and Snoop Dogg. And it's like only one of them is a convicted,
convicted felon. Yeah.
Oh my gosh. All right. This has all been like amazing information. As we kind of like wrap this up, what should we know, right? People in California, people in Los Angeles, what's the big kind of takeaway besides
I would say two things. One is like you can always do something about your taxes. Like you can always lower your taxes. It may or may not make sense. You may or may not want to do it. But you can always lower your tax bill. So there's always options. Number two, it's just like, obviously I'm biased and you don't have to work with me, but find a professional that is proactive. One that, if you're in the tax space specifically, because I'm passionate about this industry, it's there's not very much of that going on. CPAs are so loaded down with work, they just pump out tax returns and like nobody's strategizing in the slightest. So find somebody that can proactively work with you to be very intentional about this stuff, because like, you want to make something better. Well, you got to get intentional and be proactive and do some work, right? And make some
Yeah.
changes, right? And like, you do that, I promise you, there's ways to make it better. But it just all comes down to intentionality around it.
Nice. All right. Well, Penn, you do have your own podcast,
Yeah,
right? So
yeah,
let's hear a little bit about
absolutely.
that.
Yeah, behind their success. Love, it's one of my favorite things I do. I started it in January 24. Um, I interview entrepreneurs from all around the country, lots of successful business owners, them just telling their story, their journeys, like lessons learned, all the stupid stuff they did and stuff like that, right? And we all make fun of each other of like, oh man, I can't believe I did that. And
Oh
so
yeah.
it's great conversations. It's great, like, if you're an entrepreneur or whatnot, like some really high level entrepreneurs on there, just dropping knowledge, and maybe you can avoid the mistakes they made.
That's what right. We want to learn from each other. That's
Yeah.
kind of the
Yeah.
idea behind it. So, all right. Well, thank you so much. How can people get a hold of you?
Yeah. So, on the podcast personal side, just search my name, Paden Squires, Paden Squires. Find all my information out there. It's PadenSquires.com, the podcast, and everything's out there. We share a lot of entrepreneur tips and whatnot, personal development stuff. On the tax side, SquiresTaxPlanning.com. We do, we have a bunch of California clients, and like, I'm a very, across the country guy. Most of my clients don't even live locally here anymore. But SquiresTaxPlanning.com, love to have a call with you sometime or whatnot.
Yeah.
We review tax returns all the time from people and other accountants, and come back with 3 or 4 ideas that I promise nobody's talked to you about. So you ever,
That's usually
if
the
that,
case.
yeah, if that ever interests you, there's also a couple, free gifts on there. There's a tax savings checklist on there. There's also a cool little assessment that, kind of gives you an assessment of kind of how you're sitting there from a tax saving standpoint and a structure standpoint. So a couple cool little free tools. Other than that, just, reach out to us.
Perfect. All right. Well, thank you so much for being on the show. This is really great information.
Yeah.
Thank you guys for watching, listening, wherever you're doing it. And I will talk to you all soon. Thanks again. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.